Morning. So we have activity 4, financial statements of limited companies, accounting for the A levels. Yeah, the question is saying Lamaka PLC has a financial year that ends on 31 March. At 31 March 2019, the following figures were extracted from the books, subject to final adjustments. So we have the adjustment based on the additional information. So basically here we just go through the question first. The question says, prepare the statement of profit or loss and other comprehensive income for the year ended 31 March 2019. So we'll go back to the trial balance. So this is our trial balance. I think you can have it here, you can find it. So we have, I'm going to say each item of the trial balance and why it's not supposed to be in the statement of profit or loss, or why it's supposed to be in the statement of profit or loss. So we start with ordinary shares issued fully capital. So fully paid, it's not part of our statement of profit or loss or other comprehensive income, because it's part of capital. It's an issued share. So it's going to be part of our statement of financial position. So ordinary share issued, their value is not going to be part of our expenses or income. It's not part of the statement of profit or loss. I think that is clear. Is it clear, please? The retained profit is going to be part of the statement of financial position. It's the profit that is being retained from the last year of April. So it should be added to the balance. It should be added to the new profit when we are preparing our statement of financial position. So it's not going to be part of our expenses. Bank balance, this is our current assets, which is not part of the expenses. The debenture is a liability, which is not a part of our expenses. Loan is a current liability. It's not going to be part. It's a non-current liability, so it's not going to be part of our expenses. Remuneration for auditors is an expenses. It's going to be part of our statement of profit or loss. Remunerations of directors is an expenses. It's going to be part of our statement of profit or loss. Interest on loan, that's you are paying interest on loan, it's going to be part of our expenses. Interest on debentures, which is also another loan, a long-term loan, which is going to be part of our expenses. Office expenses is an expenses. Delivery expenses is an expenses. Leasehold, workshop at cost, that's the cost of leasehold. Leasehold, that's an asset. It's not going to be part of our statement of profit or loss or comprehensive income. It's going to be part of our statement of financial position. So it's not going to be part of our accounts that we're preparing. Workshop is an asset. It's a long-term asset. That's a non-current asset. It's not going to be part here. Accumulated depreciation on machinery. When you talk about accumulated depreciation is not an asset nor an expense. It is separately deducted from the value of our asset. Are you with me, please? Accumulated depreciation is not an asset nor an expense. We only take that value away from that asset itself. I think that is clear. So it's not going to be part of our statement of profit or loss. Then we have additions to machinery at cost. So this amount, we add it to the cost of machinery. It's not going to be part of our income statement. Inventory at 31 March. This is where I want you guys to say something. Inventory at 31 of March, based on the additional information, they said the inventory at March 2019 has been accounted for in the cost of raw material consumed. So we have the figure here, but we're not going to add it anymore because it's part of our cost of raw material consumed. Do you get the information there? Okay. Then we move on. We have trade receivables. When we talk about trade receivables, we're talking about the total of our credit customers, which is an asset, a current asset, which is going to be part of our statement of financial position. Then we have prepaid expenses. When we talk about prepaid expenses, they are considered as current assets. Why? Because it means you have made a payment for a service or goods that you have not consumed or not, it's not been rendered to you. So you've made the payment, but it's not yet been rendered, or you have not yet consumed it. So it is considered as a current asset because it adds value to the business. I think that is clear. So trade receivable, prepaid expenses is not going to be part of the statement of profit or loss. It is part of our other receivables in the statement of financial position. I think that is clear. Is it clear, please? Then we have trade payables. When we talk about trade payables, we are talking about our credit suppliers. So credit suppliers are considered as current liabilities. So it's not going to be part of our expenses. It will rather be part of the statement of financial position. Then we have revenue, which is going to be the first thing we have to record here. And we have our cost of raw material consumed. So how do we prepare it? So before we go further, there's accrued expenses. Yes, for accrued expenses, why do we call it accrued expenses? These are payments that we are supposed to pay for a service, or for services that has been rendered to us. It's an accrued expense. So it is part of our current liability. We are owing certain businesses, certain business. So accrued expense is not an expense, it's not going to be recorded here. It will be in your statement of financial position as other payables. Is it clear? Do we get accrued expenses here? So you could see it as expenses, but they said accrued. So that means these expenses, we have enjoyed the service, but we have not yet paid for. So we consider it as a current liability. Are you with me, please? Are you with me? Okay. Please, your head up. So then there's what we call outstanding expenses. It's not here, but I'm just telling you now. For outstanding expenses, it means these expenses is due to be paid for. We have enjoyed it, and the date to pay for it is due. So this will be recorded in your statement of profit and loss and other comprehensive income. If it was outstanding expenses, it will be part of our statement of profit or loss and other comprehensive income. So please understand the difference between accrued expenses and outstanding expenses. Both of them are expense, they are owing, they are current liabilities. But what it means is that one is due for payment, the other is not yet due for payment, but we have enjoyed the service. That is accrued. We call it other payables. I think it's clear. So now, how do we prepare it? We start our preparation. We open the statement of profit or loss and other comprehensive income for the year ended 31 March 2019. That will be the title. Statement of profit or loss and other comprehensive income for the year ended 31 March 2019. Now we start. The first item on the list should be revenue, which is 900,000. Revenue should be 900,000. Then you less cost of raw material consumed. Cost of raw material consumed. So the first item on our statement of profit or loss and other comprehensive income for the year ended will be revenue. The amount is 900,000. So as soon as that is provided, let's see if I can. We have revenue, which is 900,000. We have our cost of raw materials. We less cost of raw materials, which is 560,751. 560,751. 560,751. So that gives us, we have 900,000 minus 560,751. So we have our gross profit to be 339,249. 339,249. 339,249. That's revenue minus less your cost of raw material consumed. That's our gross profit. So as soon as the gross profit is gotten, now we take away all expenses. The first expenses we have to take away here. The first expenses is remuneration, delivery expenses. Are you with me, please? So there are delivery expenses here, which is delivery expenses. We have 68,000. Delivery expenses 68,000. Remuneration of auditors 800. Remuneration of directors 32,000. Interest on loan 800. Interest on debentures 2,000. Then office expenses 74,800. So we had all this together. So we have 68,000 plus 800, which is remuneration for auditors. We have remuneration for directors, which is 32,000. Then we have interest on loan, which is 800. Then we have interest on debenture, which is 2,000. And we have office expenses, 74,800. So the total is 178,400. So 178,400 minus 339,249. That is 160,849. 160,849. That will be our profit on business activities before tax. 160,849. 160,849 is our profit on business activities before tax. Then we're told that a provision for corporation tax of 11,000 is to be made. So we have to deduct provision. We have to deduct the corporation tax from 161,849. So we have 160,000. Sorry, 160,849 minus 11,000. So we have 149,000. 149,849. So 149,849 is our profit on business activities after tax. So we had this with our retained profit, which is part of the additional information, right? Okay, we have retained profit for 19,000. We have retained profit of 19,000. If we are told to prepare a statement of financial position, so our profit will be 149,849 plus the retained profit of 19,000. That is what we take to our statement of financial position. Is it clear? Is it clear, please?
Again, which is sort of the delivery expenses.
So for delivery, after delivery expenses, we have remunerations for auditors, which is 800. We have remuneration for directors, which is 32,000. We have interest on loan, which is 800. We have interest on debentures, which is 2,000, and we have office expenses. So these are all we have. There are.